What's not holding out is Justdial, flat in the session today. I expected the stock to react because of the fundraising announcement as well, but I think the numbers in play. Acceleration in earnings sequentially at least. So that's the interesting one bit for Justdial. Let's get in the management to speak about the numbers and the outlook ahead. More importantly, also quiz them about the fundraising. They've decided to raise up to 1,000 crores via equity issue. Let's get in Ramkumar Krishnamachari, CFO of the company, on the show. Good having you, Mr. Krishnamachari. Thanks for joining in. Your Q2 numbers show sequential acceleration in earnings. While giving us a sense of the traction in your local search and marketplace business, tell us what were the campaign additions and growth in paid listings?
Look, the trends as we maintain were very healthy, and this quarter is a reflection of all those initiatives that we have taken in the earlier quarter, including expanding our footprints into the Tier 2, Tier 3 cities in the existing city as well. So that got reflected in the number of paid campaign advertisers increasing by about net of about 18,400. We believe that the ecosystem in India is right. The small businesses are recognizing that the consumers are going internet and they need to have an internet strategy. So it's a question of creating awareness, and which is what we have been doing. And it's only a matter of time the overall number and the percentage starts improving as we move along. So which is very encouraging, as we are seeing the trends are reflecting that. As far as the earnings goes, the quarter has been very good from a margin perspective. I would say we maintain that the margin, EBITDA margin, we will be more or less be stable, because we are investing back incremental margin into Search Plus and growth investment. So if you look at it, we have recorded a 31% EBITDA margin, which is in line, which is same as earlier year same quarter. And this year we had this quarter we had ESOP expense coming into play. We had allotted around 350,000 ESOPs to various employees, and the expense of those got recognized in this quarter. We started recognizing the expense, hence there was impact of that coming in. So if you exclude that, the adjusted EBITDA margin is in line with what we had sort of anticipated.
Your EBITDA then has jumped up because of lower ad spends and non-accrual of one-off costs as well that you had booked in the first quarter. But with the focus now on rollout of Search Plus services and widening international footprint, will you be able to regain and maintain your EBITDA margins of 30% plus?
Okay, on the pricing front, let me be very clear that we always maintain that pricing is an outcome. We do many things quarter on quarter in terms of pursuing our advertisers and increasing their spend with us. If you ask me whether did we do anything special on the pricing front in this quarter, no, not exactly. But then there are several things that happen in a quarter in pursuing the advertisers to increase their spend with us, and going after increasing some of the minimum contract amount that advertisers pay with us. It's a constant endeavor on our part to have them pay increasing amount, per unit amount that they pay us. So I would not attribute any of the anything special in this quarter with respect to the pricing. As far as margin is concerned, yes, it is in line with our expectation. You would see the margin trajectory at this stable level of 30-31%. However, fourth quarter we do anticipate that we may start spending on the advertisement of Search Plus. But then the quantum of that we are not yet firmed up. So the margin trajectory overall, we believe that will be stable. with respect to previous year, with incremental margin, the incremental EBITDA margin flowing back into the investments for Search Plus and investment in growth. So that's the view. I can't give you a specific outlook for the quarter. We don't give guidance. So, but trend-wise, yes, you can expect a stable EBITDA margin.
You had a solid H1, and analysts over FY15 are expecting 30% top line growth, 35% bottom line growth. Are you on track to meet those?
Yeah, the trends are looking very good, as we have seen in the first 2 quarters, and we have no reason to believe that the trends are going to change. As I mentioned, it's all the strategies in the right place. We are focusing on the right growth drivers, and we are quite confident that the trends could continue. We will sort of deliver a robust growth. I don't want to get into any number at this point. As I mentioned, we don't give guidance. Yes, the trends are looking good. As far as the paid campaign goes, definitely I mentioned earlier also, the small businesses are recognizing that internet is important from their business strategy perspective, and they are looking at our platform, and it is our job to educate them, and we are seeing good response in that. On the evergreen, there's not much of change in strategy. That continues, the conversion, the proportion of evergreen contracts, and the average revenue per campaign, sort of, as we always maintain that it is an outcome of many things, of many variables. Some of them can have have an impact of increase in the average revenue. Some of them can drag down. So it is very difficult for me to attribute one factor that is contributing to either increase or decrease. It will be a combination of many variables at any given point of time. So we always maintain that the average revenue can go up or down 3 or 4% depending on the impact of various variables at any given point of time. But then strategically we are going in the right direction, focusing on the right growth drivers, and we are quite excited about the growth prospects of our company.
Okay, lastly, the board has given an enabling resolution allowing you to raise up to 1,000 crores. Have you narrowed down the mode of capital raising and the timeline for the same?
So it should happen in the next couple of quarters. And as far as the reason for raising is concerned, as you know, the whole internet sector is attracting a lot of capital. We believe that raising this money will give us the freedom and flexibility to pursue strategic objectives.
Okay, thanks so much, Mr. Krishnamachari, for joining and giving us that perspective. The Nifty doing okay, sitting pretty up 50 points. Come back from a very quick break and give you the final trading ideas for the show.